And President William Ruto has launched the country's first Shariah-Compliant Bond. It's called the Linzi Sukuk, which will be traded on the Nairobi Securities Exchange unquoted securities platform. Now, the Islamic Security, valued at 3 billion shillings, is set to finance the development of 3,069 affordable housing units in what the head of state now says will address the critical need for affordable housing in the country. Now, speaking during the bell-ringing ceremony, President Ruto emphasized the importance of alternate funding models for key government projects, even as he announced the government's intention to divest from 6 key listed firms in the next 3 months. Let's get more from our very own Jimmy Mbogo.
The launch of the Linzi Sukuk bond at the Nairobi Securities Exchange presents yet another shot in the arm for the government's affordable housing plan, with the construction of over 3,000 houses for the Kenya Defence Forces at a cost of 1.4 million shillings per unit. Investors are also set to receive an average of 11% in interest after the 15-year maturity period, which is lower than the current rate. President William Ruto, while admitting the importance of Shariah-compliant products in the market, ordered for the formation of a centralized Sharia governance board for the broader adoption of Islamic finance as an alternate way of raising capital for government's projects, in preparation for the possibility of the issuance of a sovereign sukuk. Unlike other conventional bonds, a sukuk bond allows the issuer to sell an investor or a group a certificate and use the proceeds to purchase an asset that the investors will have a direct partial ownership interest in, with the issuer committing to buy back the bonds at a future date at par value.
Structuring does actually take a bit of time for products like this to come to market. But what we are seeing now is more appetite for either owners of capital as well as potential project owners to now come to the market through the NSE.
We are using private funds to deliver public housing. It is the model that will leverage more resources beyond what government can do. If we were to deliver the same product using a loan, it would cost us interest of 22%. We're getting it at half that amount. So if there is anything in the realm of innovation, this is what it is.
To raise more revenue for government expenditure beyond credit, the government is set to divest its stake in 6 listed institutions in the next 3 months, a move that will also boost activity at the Nairobi Bourse. According to the NSE CEO Frank Mwiti, the sell-down by government is different from the ongoing privatization of loss-making entities and is aimed at a faster transition, unlike the listing of fully owned state enterprises, which require the preparation of the entities to be investor-ready.
Before the close of this year, we will have the first 6 companies where we have stake as government listed here for divestiture, so that the public can own what government owns now.
At the Nairobi Securities Exchange in Nairobi.